Applied Materials stock putting a little bit of a pinch on the semiconductor rally as the shares fade after earnings, but had just broken out, so we're still overall near highs in the stock. Let's talk about those and see if there's any connection to what we saw in NVIDIA's great success. Jim Kelleher is joining us from Argus Research, Director of Research and Senior Technology Analyst. Hey, Jim, good morning. Good to have you here on the show. So NVIDIA got us all excited about the chip makers, and we've had this incredible run in these hardware stocks, and Applied Materials, though, slowing down a little bit of that optimism. What happened here?
Good morning, Oliver. Like a lot of technology companies, they ran into some supply chain issues. Now, they've been very proactive in securing their own facilities and their own supply, but downstream vendors were unable to get them parts in time, and it particularly occurred in the final week of the quarter. So I should say final weeks of the quarter, so they were hit a little hard there. The company is working to... go ahead.
Well, just, we're looking at these semiconductors, and some of them are just selling like hotcakes, right? I mean, I know that's part of the problem, is a demand side to the equation, too. So is Applied Materials suffering because of any specific business choices they made in managing their supply chain? Because some of these chip makers seem like they're doing just fine in terms of demand.
Well, when you get right down to it, they generated over $6 billion in revenue in the quarter, and the foregone revenue related to supply chain was about $300 million. So it's not an enormous slug. It just caused them to miss consensus. But when you get right down to it, they, grew revenue in high double digits. For the full fiscal year, they grew their revenue over 40%. But interestingly, their order book grew over 70%. So obviously, they are leaving some money on the table. Some of these things are beyond their control. But we also are hearing hopeful signs on the semiconductor supply chain. For example, General Motors saying that all its facilities are running now. So the worst parts of the supply chain bottleneck may be getting passed for automotive. So, we'll have to see how it goes for companies like Applied Materials. I will say that they sell to just one market, which is semiconductor companies, unlike the semiconductor companies themselves, which sell to automotive, industrial, technology, et cetera. So Applied can make their supply chain a little more predictable. They're also talking about, structural changes in the supply chain, moving from just in time to just in case. So you're going to see beefed up inventories, longer term contracts, that sort of things.
So for AMAT versus the rest of the market here, we've seen some of its peers, Lam Research and the KLA-Tencor, overnight found some pressure, but they've bounced up this morning so far. So it seems like, to your intimation here, Jim, that these are not ground and earth-shattering problems that they've got, that maybe one could argue that they're, to some degree, good problems, as all the parts and the materials that they provide are going to be needed by these chip makers. So are there ways to play this group, Jim, that you prefer? I mean, what's right now the best way to get exposure to this huge demand for chips in general? Do you just buy the overall sector? Do you get specific names?
I think that the four giants all have some good things to say about them. We like Applied as kind of the industry leader, and we like their so-called PPAC strategy. Their strategy is to serve both the most advanced nodes, at Intel and Taiwan Semi, but also PPAC is to serve broader markets for maybe less sophisticated chips. We really like KLA because they're in the kind of metrology and inspection space, and they're bringing AI metrology and inspection tools. And Lam is a very solid company. We're not covering the Dutch company now, ASML, but they're obviously the leader in lithography and in the memory space. So something on our radar very much. So it's hard to fault the industry. I mean, when you look at both the secular drivers of AI, robotics, IoT, along with kind of cyclical drivers of more content per device and more devices requiring content, it's hard to see any part of the semiconductor industry that, as long as the companies are well managed, they should all flourish.
All right, we're going to trade it with that in mind. Jim, thanks for the thoughts here on the earnings. Jim Kelleher joining us from Argus Research.